Mic check 1 2 1 2. It's Sunday, guys. We are here for the Q&A, and I'm still setting up, but I am here. so just sit tight. And if you are watching this on the replay and you want to skip me setting up, take advantage of the chapters and just skip to the beginning of the show. I'm still setting up. Guys, I hope you had an awesome Sunday. And I got an awesome show for you guys tonight. I did a lot of research. I'm prepared. I'm just not set up. So I'm about to get that together for you guys now. Go ahead and get this going. Let me put this up. Bam, we can do that. What else can we put up on the screen? Yep, the sound is good. I got my lights on. It's a little hot. That's why the fan faced the wrong way. Give me 1 second. Give me 1 second. Fan was turned the wrong way. How you gonna stay cool? You got the fan turned at the wall. That ain't gonna do me no good. All right, let's get the prompter set up and get the script in here. Yeah, guys, the market was it was crazy on Friday. Some macroeconomic news came out. I've heard something about job reports, and the S&P 500 took a dip on Friday, and it probably scared some people, which I'm not surprised, and we'll talk about that tonight too. So like I said, I'm still setting up. Use the chapters if you're watching a replay to skip ahead. I have no idea how long it's going to take, but I'm on time. At least I'm here. So we got that. Let's go here. Cut the chat box on. Got that going. Okay, blah, 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 blah. Looks like it already knew. Select live storage, lives already added. Good, good, good. Let's go down here. It's saying so. I ain't even worried about that. I still haven't figured out how to use this Social Stream Ninja, guys. Is that the name of it? Sometimes I get it mixed up. And I don't have my other mouse up here. Yeah, we gonna get it together. We gonna get it together. Let me get the script part going. I have that ready to go. I don't even have a closing on the script. That was one of the things I forgot to put on there. I got the topics of everything we're gonna discuss tonight. Yeah, I got the Q&A questions on the chat, but come on, mouse, come on out. There we go. Give me a mouse pad for that. How you doing? Thank you for tuning in. Hit that like button. Consider subscribing to the channel. I definitely would appreciate it. All right, got a mouse pad there. Get this mouse active. Yeah, guys, I ain't trying to be fancy. It's just that one of these mice got way more controls and features on there to help me draw the things we need to draw on the chart. So we got that. Let me double check to make sure we got the chart stuff set up. We do. Let's get the script going and then put a closing on it. See you tonight. Have your questions ready for the Q&A. Yeah, this was the stuff from the promo. So yeah, we got the promotions and stuff done this week. That was good. So what's that? That's trade. We're not gonna look at that one. We're going to rotation tracker. Got it. So we got that ready to go. The script, guys. The script. Where is the script? Again, I said, I hope you guys had an awesome weekend. I did. I got some rest. Oh, guys, I needed that rest. Oh, I needed that rest. You saw me. I was like, thank God it's Friday and it's Sunday already. Now we here for the Q&A. We are here for the Q&A. There's the weekly recap live. and it loaded up. So now what I need to do, I need to put a closing on this, loading in, and we can get started, guys. So thank you for being patient and thank you for tuning in. Hit that like button and consider subscribing to the channel. And I'm still setting up. The show is coming. I'm setting up. I'm on time, but I'm setting up. We're looking probably at like maybe 2 or 3 more minutes at the most. That's where we at. That's where we are. About to put a close on the script, put the script in the prompter, and we can be on our way. Monday, Sunday. What's the date for next Sunday? Need the date for next Sunday. The date for next Sunday is the 14th. So June 14th. At for joining me tonight. Oh, all right, we're closing. All right. So bam, bam, bam. Got it. All right, so we got that part. Now let's put this on here. Got it. Now we need to open. I don't think I did that part. Can you even hear me? Am I about a mic? Yeah, I think you can hear me. Chat, 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 chat. Okay. I need one more thing. One more thing. That's a simple line. Welcome to weekly recap live. I'm your host, Joseph Martin. You hear that? I knew Sundays was going to be a trip. I knew doing this on Sunday. I'm like, we need to do one more day. We do shows 5 days a week. Now we need to do one more. And I knew, I said, boy, oh boy, I know that my family is going to be all in the background jumping. Oh my gosh. The 11 o'clock. That's why we do the 11 o'clock throughout the week. That's why we do 11 p.m. because by that time, everybody should be in bed. That's why we worked it out that way. So I'm like, Sunday, we need a format that's a little bit more laid back. We need to give you guys some type of break. Like, man, if you did it just a little bit earlier, I'll watch the show. Well, one, you can watch it back, so you don't have to stay up at 11. You can watch the replay. And then as far as Sunday, I actually wanted to do 7 p.m., but worked it out with the wife, and she's like, well, can you do it as late as possible? I got to do it earlier than 11, so let's roll with 9. So that's why we're at where we at, but we're here. So let's go ahead and get this in the prompter. Got it. Did we put that over? Oh, I already put it in. Okay, let's get it on the prompter and we can get this rolling. Okay, blow that up. Got it. All right, we can minimize that. Let me make sure ain't nothing missing in the script. Let me check that. Excuse me, because sometimes we end up having that problem. All right, and we still working out this format on Sundays, guys. So thank you for being patient. Thank you for working with me. And again, anytime you see me say mic check 1 2 1 2 on a replay, that means that I'm gonna be setting up. So just go ahead and use the chapters and you can go right to the beginning of the actual live stream. Okay, so let's go ahead and get started. Welcome to Weekly Recap Live. I am your host, Joseph Martin, and thank God it is Sunday, guys, and we are here for the live Q&A and the weekly recap, so we can review what happened in the market as far as the companies that stood out, what significant changes were made, how the 11 sectors performed, because it seems like right now the market only think it's one doggone sector. Everybody talking about information technology. And if they are talking about anything else, they talking about energy. They talking about energy because they know it takes a lot of energy to power AI. So information technology, it's like, bruh, there are 11 other there's 10 other sectors. And if you are paying attention to energy, or if you associate that with what's going on with AI, there are 9 other sectors. And it seems like everybody is just all on this AI thing. Now, I'm not saying AI isn't coming. I'm not saying that it's not going to be a good investment. I just think from what I'm seeing, there's too much attention being focused on one sector. It's just too much. The average person is going to lose. That's what I've seen in the market. So if it's just easy to just jump over into this sector and you're just going to keep making money, something's going to happen. And most of the time it ends up being like a bubble. When everybody and their mama start making money in the market and they don't know how to trade, they don't know how to invest, it's just easy. It ends up creating some type of bubble. So I hope I'm not coming off like a pessimist, but I'm concerned that the other sectors are totally being ignored. That's how I'm seeing it. But that I got my rant off. We started the show. Let's go ahead and look at how the sectors performed this week. So let me pull that up on the chart. Thank you guys for tuning in. Hit that like button and consider subscribing to the channel. Let me pull this up. Bam. We are not looking at that. So that's left over from when we did the show on Friday. So let's take that off. And let me change this to something more appropriate. Let me update this. SPX, yeah. SPX, PX, and then sector, rotation, study. All right, let's put this on the screen and I'll explain what this is. So SPX, that is the ticker for the S&P 500 index. So if you look up here at the top, SPX, the time frame we're looking at is 5 days. So Monday through Friday, the SPX, S&P 500 went down 2.6% as a whole. Now up under that, you see where it says sector rotation study. That's a customized study that you're looking at. I know the squiggly lines be like, what the heck is that? It's very easy. We just gonna read the labels at the top. If this is the first time you seeing me use this tool, okay? We just gonna read the labels at the top. So let's go through and look at how all of the 11 sectors performed in the S&P 500. So the energy went up 2.5% this week. Materials went down 1%. Industrials went up 0.6%. Consumer discretionary went down 5%. Consumer staples went up 0.6%. Healthcare went up. They gained 2.4%. Financials went up 1.4%. Information technology went down 5.6%. Communication services went down 3.5%. Utilities went down 0.2%. Real estate went up 1.6%. Okay. So out of the last 5 days, which one of these sectors performed the worst? Information technology. Which one performed the best? Energy. Healthcare came in as a close second with 2.4%. Now, here's what I want to look at. Since there was a dip in the information technology sector on Friday, I'm going to go in my study and I'm going to change this from 5 days to 1 day. But we're going to do that last because the normal way we do this, we go through 5 days. So we look at 1 week, then we look at 1 month, then we look at 3 months, and then we look at 6 months. Then we look at 6 months. Put a 5, 6 months. So let's go ahead and look at 1 month and see how the sectors perform. So the SPX is only up 0.3% on the month. Energy is up 1.2%. Materials are down 3.4%. Industrials are down 1.5%. Consumer discretionary is down 4.2%. Consumer staples is down 1%. Healthcare is up 5.2%. Financials is up 0.9%. Information technology up 6%. Communication services down 4.8%. Utilities down 3%. Real estate down 0.1%. So that's the performance in the last month. Let's go to 3 months. So the SPX performance in the last 3 months, the SPX is up 9.6%. Energy is up 1.9%. Materials up 1.5%. Industrials up 2.5%. Discretionary up 0.4%. Staples, consumer staples down 2.7%. Healthcare up 0.2%. Financials up 3.4%. Information technology up 31.3%. Communication services down 4.9%. Utilities down 5.1%. Real estate up 4.2%. I'm going to go back to 1 month because it's something we didn't ask ourselves, but we'll do this one first, and then we're going to go back to the 1 month. So which sector performed the best in the last 3 months? Information technology. That was easy, 31.3%. Which sector performed the worst in the last 3 months? Consumer, nope. Communication, nope. Utilities, because they were down 5.1%. We did not do that when we looked at the 1 month. So let's go back to that one. Which one performed the best in 1 month? Believe it was nope. Information technology at 6%. Which one performed the worst? Communication services. They were down 4.8%. Okay. So now let's jump all the way over to 6 months. How did the sectors perform and the SPX in the last 6 months? So the SPX is up 7.8% in the last 6 months. Energy is up 25.6% in 6 months. So if we go back, that means that the majority of this gain that we're looking at is going to be 3 months after the most recent 3 months, if that makes sense. Because we just added an additional 3 months to the last 3 months we just looked at. I hope that makes sense to you. So the majority of this gain is from 3 months ago, starting 3 months ago, then 3 months after that. That's where most of that is from. Materials up 13.8% in the last 6 months. Industrials up 13%. Consumer discretionary down 3.9%. Consumer staples up 5.9%. Healthcare down 1.3%. Financials down 2.3%. Information technology up 24.4%. Communication services down 3%. Utilities up 1.3%. Real estate up 8.8% in the last 6 months. Which one of these sectors performed the best in the last 6 months? Energy, 25.6%. Which one of the sectors performed the worst in the last 6 months? I'm seeing consumer discretionary at negative 3.9. So we just reviewed the 11 sectors performance and the S&P 500, looking at the ticker SPX, S&P 500 index. And just in case you don't know how to look at that, let me show you. So right up here, this is our symbol box. So that's where it says the SPX. So that's the ticker. But right here is the name of the financial instrument or the index. So we're looking at the S&P 500 index. The information is right there. Okay. Bam. Now, what did I want to show you next? Like I said, we're working out the format with this, so I'll know in the video description. So let me put me back on the screen to where it's just me. We're going to take the chart down for a second. Thank you guys for tuning in. Hit that like button and consider subscribing to the channel. I greatly would appreciate it. I know why this isn't moving up. It's because of this. All right, so I'm about to fix these charts real quick. That's why I took it down. I wanted to check to see something. It was something that I wanted to make sure of. Oh, I wanted to look at the description of the video, because it's something I wanted to make sure that I covered that's in the description. Give me a second, guys. I want to make sure I'm covering everything. All right, content live upcoming Q&A. Okay, edit. Here we go. All right, so we looked at the 11 sectors in the S&P 500. Now we need to talk about the companies that stood out, notable market events, and performing the live Q&A for our community. So if you have any questions, make sure you put them in the chat, and then we can address those tonight, okay? All right, I believe you're good with that. Now, we're going to do some of this out of order, but we're going to go ahead and cover it. So, notable market events. That's what we're about to talk about right now. Notable market events. Notable market events. I want to make sure I put this. I add that in the script later because I want to make sure I'm following this. So, if you were not aware of what happened this week as far as with the PDT rule, if you've never heard of this, I'm about to explain it and break this down now. The PDT rule was a significant regulation that was eliminated that prevented a lot of retail traders from being able to be in a position to day trade. They had to meet a certain requirement, and a lot of retailers weren't actually able to do it. So let me explain to you how this works. So the PDT rule was officially eliminated on June 4th this week. For those of you who are unfamiliar with what this rule was, it was a regulation that was put in place to limit the retail traders or the average person from day trading. PDT stood for pattern day trader. Without being too technical, basically someone needed to have a margin account valued at over $25,000 to day trade without restrictions. At the beginning of a trading session, they had to have that value before the trading session started for that day in order to be able to day trade and meet the requirements. They couldn't add the money after the session started and then qualify. It went by whatever the value was at 9:30 a.m. Eastern time before the market started or open for regular hours, okay? So day trading, if you don't know what that is when someone opens and closes a position in the same security in the same day. If they buy something and sell something and it's the same thing within that day, or they sell something and buy it back, that's the same thing within that day, day trade, okay? If you had a margin account, and you got flagged as a day trader, you ran the risk of getting a restriction put on your account. The longest restriction lasted 90 days that only allowed any trades in that account to close positions. You couldn't open any positions. The reason why it's kind of tricky to explain this is because the average person thinks that the only way for you to make money in the stock market is by buying and then selling. But you can also open a position by selling and then buying. Okay, you sell first, so you borrow some shares, you sell them with the idea that the stock price is going to decline, so you buy them back at a cheaper price and keep the difference. So that's why it sounds like I'm tripping up over what I'm saying, because I want to make sure that I'm covering the entire way that it could be done. So that's why I'm just saying open and closing positions, because could be a long or a short position that you're opening. And I know for beginners, some of these technical terms they wouldn't understand. So I try not to use them, but they actually have to be used in certain situations for you to even understand, for me to be able to even communicate it effectively. Like I would have to go into a deep dive like I just did to explain it to somebody that didn't have any idea about how this worked, okay? So unless they were able, oh my gosh, I'm talking so fast. Give me a minute, guys. All right. Unless that person was able to raise the value in that account to $25,000 or more before the 90-day expired to remove the restriction. Before the 90 days expired to remove the restriction. So I kind of explained something in the middle of that, so I'll back that up because it probably didn't make sense because I did that long explanation in the middle. So the longest restriction lasted 90 days that only allowed trades in that account to close positions unless they were able to raise the value in that account to $25,000 or more before the 90 days expired to remove the restriction. See how that makes sense now? All right. Now, the only requirement to day trade now is a margin account. And the regulated minimum amount value for a margin account is $2,000. Guys, that's a huge difference from $25,000 down to just $2,000. And it's just not dollars, it's the value in the account. So if someone owned assets inside that portfolio or in that account, not just portfolio, in that account, as long as that value was over $2,000 at the beginning of that trading session for that day, then they met the requirements to be able to day trade. That's what that means. That's what it is now with the 2,000, and that's how it had worked with the 25, but now it's 2,000. So this is great for retail traders who know what they are doing as far as being profitable in the stock market, because this allows them to use a wide range of strategies in a smaller account. But for those retail traders who don't know how to be profitable yet and manage their risk properly, I think a lot of them are going to lose a lot of money. Okay. Now, guys, I'm a firm believer in taking a step back and asking, what is in it for the regulators, the government, and the brokerage firms for eliminating this PDT rule? They didn't just do this for people to be able to day trade. It had to be a benefit in it for them as well. At least that's my opinion and my perspective. So this is what I looked at, and that's what I'm going to share with you now. What's in it for them and how do they profit from it? That's what we're going to discuss. So first, let's look at the regulators. What do they stand to gain? Simple. They make the government happy. Next, let's talk about the government. Now, you might be thinking, wait, you didn't explain how the regulators will be making the government happy. I know I didn't. I purposely didn't. That's because we can answer both the regulators and the government at the same time. So day trades are taxed as short-term capital gains versus long-term capital gains, which is usually a lower rate. Long-term capital gains are usually taxed at a lower rate, and day trades are going to be taxed as short-term capital gains, which are usually higher than the long-term capital gains. That's the idea. So giving more retail traders the ability to day trade allows the government to benefit from an increase in short-term gains tax revenue. So that's how they benefit. Okay. Last but not least, the brokerages and the institutions. So you have institution traders and investors, and then you have retail traders and investors. The other terms for that is smart money and dumb money. Guess who they call dumb? Us, retail traders. So all those traders who have margin accounts with values ranging from $2,000 to $24,999.99 can now day trade with no restriction. Okay? Because now they're meeting the higher threshold on margin accounts. This potential increase in trading activity will generate additional revenue from payment for order flow. Okay, that stands for revenue. Yeah, revenue from payment for order flow. So that's PFOF. Look it up. Payment for order flow. So what happens is some institutions, some companies pay for order flows from brokerages. So since they pay for that, the more orders they have, the more they charge. Okay. And options contract fees. Data is very valuable. So why would they pay for order flows? Data is valuable, guys. Very valuable. It helps them know what's going on before the average person does. They want that advantage. That gives them the edge. And options contract fees. So because the PDT rule applied to day trading options as well. So that means that brokerages are going to make more money from increased trading in options because now more people are going to be able to day trade options. Commissions on trading stocks and ETFs is still free. depending on the brokerage you use. But I'm thinking it's almost like an industry standard now for stocks and ETFs and things like that to be commission free. But there are still fees for trading options. So if people start day trading options more, then this is more fees that the brokerages will be able to collect, because the PDT rule applied to day trading options as well. Got it. And less regulations means less money brokerages have to spend on enforcing them. So with them reducing the regulations, now the brokerages get to save money on that. And the institutions love this because increased trading adds liquidity and volatility, which makes the market extremely profitable for them when they're able to position themselves to exploit it. It's very profitable to take advantage of more of the people that don't know what they do in trading. Remember, they call retail traders dumb money. They don't think that the average person is smart enough to know better. So the idea is if they can get more people that don't know what they're doing participating in the market, then the smart money, the institutions, will be able to make more money. That's the idea. Now, even though the PDT rule has been officially eliminated, brokerages have until October of 2027 to have their systems fully updated to manage the margin accounts and allow day trading under new regulations. All right. So a few brokerages like Webull, for example, were ready to go the same day. They were already ready to allow people to day trade. Matter of fact, let me go ahead and pull that up for you. I'm gonna go to Webull's website and I'm gonna show you what I'm talking about, because they had it listed on their website explaining. They already promoting it like, hey guys, you can day trade over here. Webull. All right, go here. All right, it's the first thing that pops up on their website. So here we go, so you can see it. And let me update this information, okay? And Webull is also a publicly traded company. So I'm going to put all that on the screen right now. Just give me a second. Let's blow that up. Now we got the disclaimer there. Let me put this in here. We talked about that. So the ticker, if I'm not mistaken, is Bull. So Bull. You know what? I'm going to make sure I get this right, guys. So let's go here. Let's go to Analyze. I'm going to put in Bull, so we can get the official company name. So it's right there. Take me off the screen so you can see it. Webull Corporation. Let me put that there. All right, that's right. Now let me go here. Webull Corporation. Here we go. Webull Corporation. Got it. All right. So Webull Corporation, got that ticker ready to go. So save. Here we are. Now we can put me back on the screen and go to their website. So minimize this and then put this back on finances. The financials disclaimer. There we go. All right. So here it is, the PDT rule. They're explaining it right here on the homepage. As soon as you go to Webull, day trade without the $25,000 minimum. June 4, 2026, no more $25,000 minimum, no more day trade limits. So we go ahead and click learn more. See how quick they telling you to open account, deposit fund, they getting you on it quick. So let's scroll down. Day trading rules versus intraday margin rules. The SEC is modernizing day trading rules. Here's what it means to you. So here's the feature. So they break down the old PDT rule ending June 3rd, 2026. Day trading limits. Accounts valued at less than $25,000 are limited to 3-day trades every 5 business days. Day trading limits. So anyway, this is the breakdown of that. So I'm showing you where to find it if you want to go into deeper details, how much time we are. We already spent like 35 minutes in the live stream. Actually, let's take our time because I wasn't ready. So I actually didn't start on time tonight. So let's just give people time to tune in, stuff like that. So day trading limits, accounts valued at $25,000 or greater are not restricted by the number of day trades. Now, remember, this is the old rule we're reading. This is the old rule. I'm just reading it on this. Oh, we can do a side by side. Yeah, that'll be easier to understand. So here's the old rule. Here's the new situation that starts June 4th. So day trading limits. Accounts valued at less than $25,000 are limited to 3-day trades every 5 business days. Accounts are not restricted by number of day trades. Huge difference. Day trading limits. Accounts valued at $25,000 or greater are not restricted by number of day trades. Accounts are not restricted by number of day trades. Okay. So with them saying this, it doesn't even seem like you need a margin account. So that means you can day trade in a cash account? Got to look into that. Pattern day trader flagging. A PDT flag is triggered when you place 4 or more day trades within a 5 business day period in a margin account. No flag will be triggered. Intraday appreciation. Use of intraday appreciation for day trading can trigger day trade calls. Intraday appreciation can be used and is immediately added to intraday buying power. Trading regulated margin calls, equity maintenance, EM calls, day trade, DT calls, and EMDT calls. Intraday margin deficit, IMD calls. So they switched it to what they focus on. Okay. So we looked at that on the Webull website. Let's move on. Let's talk about Charles Schwab because that's another example. So Charles Schwab account said they would have their system ready by after hours trading tonight, Sunday, June 7th. They said they would have it ready by tonight. All right. So we covered that talking about the PDT rule, and we spent quite a lot of time on it. But the next thing I want to discuss is the information technology sector. All right. So with the information technology sector, we actually going to kind of double back to what I opened up the show with. But let's talk about it. If you didn't know, the market took a hit on Friday, June 5th. All right. They took a little hit. The SPY dropped 3% from the 52-week high. It posted on Tuesday, June 2nd. So let me pull up the chart so you can see what that looks like. Let me fix this and then I'll bring you over so you can see it. Market close. Yes, it is. Got it. So let me pull the chart over so you can see it. Bada boom, bada bang. Educational purposes, no. We need this disclaimer, and we're not looking at bull. So trading platform, we're looking at the SPY, and I already had that one ready. Thank gosh. All right. So that was the weekly. We're looking at the daily chart. So this is the 1-year daily chart. And zoom in on this section right here. Bring that over so you can see it. So this was the high that they posted, the 52-week high, the June 2nd at $760.40. And then this is down to the close. So you can see that it says -3% right there in that trend line box. Okay. So that's what I was talking about. So just giving you a visual. And if you want to see the technicals, I'll put them back up there. So here are the technicals that we drew on the chart or have been drawn on the chart since we've been watching the SPY during our weekly live streams at the Market Recap Live. But the information technology sector, by looking at the XLK. So this is an ETF that focuses strictly on all of the companies listed in the S&P 500 index that are in the information technology sector, if you didn't know. Okay, so we're going to look at that next. Let me pull that up. Now, I don't think we ever looked at this on the live streams before, like monitoring it the way we do the SPY, but it's XLK. And remember, I showed you this up here. So you got your symbol box, State Street Tech Select sector. It's a lot. I'm trying to read it. It's just, it's so jumbled up. You see what I'm talking about? Like right here, how jumbled up this is. It's almost hard to read. Spider ETF Tech. So this is the information technology one. They have an I here, and then it says SECT. So it's so many abbreviations. That's why I look confused. I would have to do research to find out what that even mean that they're abbreviating over there, okay? But this is what we're looking at. So over here, let's zoom in. This is the ETF that just focuses on the information technology sector. Zooming in, guys. I'm zooming in. I know it's a lot going on. All right, so they hit a 52-week high, and we looking at a 1-year daily chart on Wednesday. Their high was on Wednesday at $198.73. And here was the close. So that close was at $180.30. So they have lost 18.4. No, that's yeah, $18.43 from that high, which is down 9.27% from that 52-week high. Right. So I'm seeing that in my notes. So let me go ahead and read that the way I have it. It closed the week down 9.27% from that 52-week high it posted on Wednesday, June 3rd. So I have that in the script, and I just walked you through it so you can see it. I already felt that the information technology sector was running on fumes at these levels because of a few reasons. Okay, we can take that down. We seen it. So there's a few reasons why I felt like the information technology was running on fumes. So here it is. The first red flag is that the whole market is only talking about the AI and energy sectors. AI isn't a sector by itself. It's not. AI is not a sector. But most of the companies providing the goods and services for AI are in the information technology sector, which is why when something happens with AI, that sector responds the way it does. Okay, so now you know that. And now the retail traders have caught on to the fact that AI requires a lot of energy to power it. So they are investing in, or seem to be attracted to, the information technology sector as well as the energy sector, which is what we looked at the beginning of the live stream when we were looking at the sector rotation. We have 11 sectors, and where attention goes, money flows. I hit the mic. We have 11 sectors, and where attention goes, money flows. This is why I believe it's going to be great opportunities trading at great prices, because they're undervalued in the other 9 sectors that nobody's talking about. We just need to find them. We just need to find those opportunities and those companies in the other 9 sectors that people aren't paying attention to. The second red flag was that the SPY was trading at record levels on low volume. All the last, I would say, 2 or 3 weeks of the live streams as the SPY. Let me pull it back up on the chart. Let me pull it on the chart. So we go here. Let's pull up the SPY so you can see what I'm talking about. This was XLK. I should have updated that. He's talking about the XLK with the SPY on the screen. Let's go back to the SPY. So every time it was making a new high, guys, so when it got above that level, we got so much stuff on this screen. This is what I'm going to do, guys. I'm going to take off these levels, make this cleaner to be able to see it, and I'm going to zoom in on what I'm talking about. Every time, I wouldn't say every time, I would say right here. When it got above that gap, when it gapped up right here, so this gap came back and filled up. You see that? I'm not even sure if you understand. You see this yellow gap right here? That's what we put here. This is a gap. That's why it's yellow. So there's no regular daily trading activity at those price levels. It never got filled. This one got filled. This one didn't. This one didn't. But this one in particular got filled. So it did at least do one pullback to fill a gap. So it looks like this candle came and filled that all the way in. So if I make this yellow and I extend it over, you'll see what I'm talking about. And we don't even have to. Yeah, let's go to December 1st. So we go to December 1st. We're looking for price action in a regular daily session that came down and filled that price level. It looks like this candle right here did it. So the low on this candle that I'm moused over is $702.64. The high on this one is $702.78. So that means that it filled it. Okay. So this should only go out to April 21st. So I'm gonna change this so you can see what I mean. So go to the candle, the calendar, April, I said 21st. Yeah. So you see what I mean? I made it short enough so you can see where it got filled at. It hadn't been filled yet till that day. So now that it's gotten filled, you can see that that gap is no longer there. That's why I did it, so you can see it. Now, when you come up here, when we get up to these levels above, what price range is this? I don't have no price range there. So let me put a price here so we can see it. Come on, mouse. Here's a price level. We're going to put a price level right here under this candle. So that's May 6th. So that's $727.82. Once the price got above that, and that's the top of the gap, that yellow zone we looking at, it never filled that gap. It never came back and filled that gap. Once it got above that gap and it kept hitting these record highs, it did do a pullback here. Let me get that off. It did a pullback from this candle down to that one. It did do a pullback. But what I was noticing, that once it started coming up here, it would increase in volume on the down candles. But the highs it kept making were on lower and lower volume. It just kept going up on lower and lower volume. So when we got to this candle on Friday, it was one of the first candles we have seen in a while where it actually hit above average volume. Now, I'm going to repeat what I said again in my script, but I just wanted to explain that on the charts where you can see it. And then from that 52-week high this week on Tuesday, that's what we're looking at. So this was Friday, Thursday, Wednesday, Tuesday, 52-week high, $760.40 down to the close on Friday. And I'm putting it on the screen so you can see it. And that's the SPY. So let's talk about it. The second red flag that I had saw was that the SPY was trading at record levels on low volume. I'm talking about less than half of what the trades are on average, less than half. Okay. Now you can kind of see that on the labels on the screen. So I'm gonna show you what I mean. Let me take me off the screen real quick. So if we look over here at the volume labels, the previous volume here is going to be Thursday's volume. The average volume is 74 million shares in a daily trading session. This 50 was actually higher than what it was getting on average over here. So let me show you where to look. Let me show you where to look. Let me show you where to look. As I mouse over these candles, this box right here in white text, this volume is going to change as I mouse over each of the candles. So I want you to pay attention to this right here. And it's changing right now because I'm mousing over candles. But these aren't the candles I want to pay attention to. I'm going over here. Let me change this. So here's the volume for Friday. You see how it matches the yellow volume bar right up under it? The 93 million. Now when I go to Thursday, now that matches the previous volume. Notice when I keep going to the left, these volumes are going to be below average. Here's Wednesday. So Wednesday was 51 million. That's below average. You see the high? That was on Tuesday. That's 31 million. That's less than half of 74 million, which is average. That's when it hit the 52-week high. Then on this one, so this is Monday, that volume is 43 million, 43.6 million. Friday of last week, 55 million. Thursday of last week, 41 million. Wednesday of last week, 42 million. Tuesday of last week, 41 million. It was trading lower than average, almost half at these record highs, guys. And it was concerning me. I couldn't figure it out, but I kept mentioning, I was like, this don't feel right. You can go back and watch live streams. I'm like, this doesn't feel right. It's not hitting these highs on at least average volume. And I'll explain what this means. Let's move on. I just wanted to give you a visual so you can walk through this. I'm actually liking this on Sunday because I don't have to feel rushed. This ain't the regular format. So we just gonna take our time and just, you know, get it going. All right. So I'm talking about less than half. Let me finish what I got on the prompter because I don't even know if I said it or not. I'm talking about less than half of what it trades on average, which is around 75 million shares in a daily trading session. But if it was a red candle at these levels, the volume would still be below average, but it was higher than it would be if it was a green candle. I couldn't quite figure out what didn't feel right about it at those price levels until it finally traded above average volume. The price dropped when the volume got back above average. That's that green, that's that large green candle, I mean red. That large red candle you see, that's also the first close underneath the 9-day simple moving average that it's had in a while. It hadn't closed below the 9-day simple moving average since May 19th. And if you wonder how I got that date, it's down at the bottom, but I'll make it easier for you to see. So I'm gonna cut on the floating data box, which took a while to open. Now, when I mouse over that candle that I'm talking about, this red candle closed below the 9-day simple moving average, which is that dashed green line. That date, May 19th. You can see it at the top of that floating data box. Okay. And then this was the first candle to close below that 9-day simple moving average again in 1, 2, 3, 4, 5. So we can manually count the candles, or we can do it this way. Cut the floating data box off because it's distracting. Then I go here, use the trend line tool and connect anywhere on these candles to get the days. Just connect it to that. And those are all the candles that closed above the 9-day simple moving average. So when I mouse over to tell me, it had closed above average for 11 trading sessions. And if you don't know how to read that box, I'm gonna explain it to you. 15 days is exactly what that is. That's days. That does not include the actual days the market was open. Bars are the days the actual market was open. That's going to be the candles. So it was 11 trading sessions that the SPY was trading above the 9-day simple moving average since the last time it had traded below it, which was on May 19th. Then the first time it closed below that 9-day simple moving average, it was on higher than average volume, and it was a huge red candle. That's what we got from that. All right. Which tells me, this is what I got from what I'm seeing on the charts from my technicals, which tells me that more people believe the price should be lower than they believe it should be higher. More trades happen on the bid than on the ask, which resulted in a large red candle showing selling pressure on above average volume. All right. Now I'm going to give you some more insight, because some people don't know or understand this. I've mentioned it a few times, and I'm actually going to show you an example of how some people say this, and I'm gonna actually show you that this is impossible. I took a screenshot of a YouTube video that I was watching earlier because a gentleman actually mentioned what I warn people about. Like, that's not the case. It's impossible. I actually like his content, and it's a common misunderstanding. So I'm not throwing this gentleman under the bus. I want you to understand that. That's my little disclaimer about it. But I am going to show you a section of his video where he says what I've heard people say multiple times, and it's not actually true. It can be very misleading to someone that doesn't understand what people are actually saying. So I got this note in my phone. I think it's right before 8 minutes. So I'm going to just pull the video up. And I don't even know if you guys hear it. I don't even know if you guys gonna be able to hear it, because I've never really done this before. I've never done this before. So let's try to figure this out. The sound from the video. Can I do this? Let me hide that. Let me go over here. So if I do, let me blow this up. I know. You're like, man, what he doing? Bear with me, guys. I've never done this before, but I want you to see this. This is important. This is important for education purposes. So let me put me on the screen. Okay, and change the disclaimer. Let's cut that off. We don't need that right now. And actually, I want to blow this up. That's what we need to do. Blow that up. All right. I want to know if I can put this sound in the video. I'm going to mute my mic. No, I ain't going to do that. How can we do this? Sound. Here's the share. So if I go here, share, will it play the audio? I'll see it if it does. Let me mute my mic and just play it and see if it does. It doesn't. When I mute it, it doesn't show this source's volume. That's what I get. I ain't never did this before. First time for everything though. So let's go to replace. It is on. It say also show volume. Let's try it now. Also show tab audio. Let me try it now when I play the video. And I'm gonna mute my mic.
Sense that was appropriate. Now, I'm not telling you to ignore your
watching. Can you do me a favor and tell me if you can hear that audio when I play the video? Because over here on the, I can't tell. Please comment, whoever watching, let me know if you can hear that audio when I play the video. It'll help me out tremendously. I'm gonna play
family, or to ignore all the joys in life and to just focus on your work and that's it. Obviously, Warren is an extreme case here, and that's why he was able to be like the 0.001% of people. And if you do want to be one of the 0.0001%,
I ain't getting nothing in the chat. Let me do it myself. I'm gonna check to see my live. Guys, I don't care. I'm taking my time today. I gotta figure all this out because this ain't gonna be my last Sunday doing this Q&A, and I'm here for y'all. That's why I'm here. I'm here on Sunday, so if somebody got some questions they want to ask, I'm gonna make sure that I'm available so I can answer it. So I ain't in no rush. I'm not gonna do nothing but eat when I finish this live stream anyway. So let me go here. All right. And let me go to my own channel. All right, there we go. This is the wrong one. That is uncut. I don't want to go uncut. Here we go. All right, I'm about to watch my own live stream. All right. I'm watching my own live stream and I want to know if this is going to play through here. But it's delayed.
1% of people, then you have to obviously make sacrifices. But I think for everyone, there's a very important lesson here. And that's that you need to have the ability to put blinders on.
I'm listening, guys.
It's delayed. 1% of people, then you have to obviously make sacrifices. But I
It
think
worked. Great. That was easy. It worked. All right. So, know it took a while to figure this out, but I don't care. I had to learn and I got it. Took some time, so we're good. So let me go to where this gentleman said what I wanted to show you, and we can take the spiral off the screen and put the Q&A stuff back. So let's go here, Q&A. Bam, got it. Educational purposes, yes. Now I took a screenshot when I watched it earlier. Is my mic on? Yes. Put the chat back over here. Go to my screenshots and look for where he said it. It looks like it was right before 8 minutes. So let's go back to, so right before 8 minutes. Right before 8 minutes. So we're going to put it like around 7. Let's go to 7:28. Let's just try that. All right. And I'll play it and I'm going to mute my mic.
The whim of the crowd, but on the facts. Buffett took this to heart, partly because he saw Graham in idealized terms as a hero like his father. And one of the reasons Warren Buffett was able to outcompete everyone when it came to stocks was this simple advice. It was that he was able to be right and act on it when everyone else was wrong. Take the mid 70s, for example. In the mid 70s, there was a huge market crash around 1973. Everyone was panicking and everyone was selling. And remember that the market goes down because more people are selling than are buying. And so the selling puts pressure on the price of the stock and it pushes the prices down. But
I'm going to play that one more time so you can hear what he said. Okay.
everyone was panicking and everyone was selling. And remember that the market goes down because more people are selling than are buying. And so the selling puts...
All right. Now you heard what he said. He said the price goes down because more people are selling than they're buying. Come on, monitor. I got it. I see what's wrong. There we go. All right. Mike, yes. Okay, you heard him say that. He said the price was going down because more people were selling than they were buying. I've heard people say this so many times, and guys, let me tell you, that is wrong. And I'm about to explain to you why this is wrong. If you understand this simple, basic mechanics about price movement, for me, it changed my life when it came to investing and trading in the stock market. And it's so simple, but yet so few people understand it. If I sell this, that means that somebody bought it. I'm going to show you this one more time. If I sell this, that means somebody had to buy it. So if I have more sellers than I have buyers, it means that I ran out of something to sell. If you have more sellers than buyers, that's the only way that could be true. If we see that the volume is high and there was 93 million shares traded that day, listen what I just said, traded that day. So that means it went from one person to another. Someone sold it and someone bought it. It's impossible to have more sellers than buyers. I just showed you it's impossible. He's reading an investment book and he said that. And it's a lot of people that believe this. That is not true. It's impossible. If somebody sold it, somebody bought it. So you had just as many sales as you had buys. So what actually causes the price to go up or down? It was what I explained to you. So let me give you the visual on the chart. So here's the visual. Right here where you see bid and ask. If you didn't know that's what that was, that's what that is. The B stands for bid. The A stands for ask. So think of it like an auction. I just said something, you couldn't see it. Let me take you back to the charts. Oh my goodness gracious. I know what it is. Because I switched the, let's go to entire screen. I changed the way it was set up, guys. So since I changed the way it was set up, it changed the whole look of the SPY and the Q&A. I figured it out. I fixed it. No problem. Let me just put the SPY back on the screen and then we can move further. We figuring it out. I don't care. I'd have made so many tech. I'd have had so many tech. This is normal to me. I'm good. I don't care. I'm having fun doing what I do. So right over here on the chart, B stands for bid. A stands for ask. Let's make this very simple because people don't even know what that is. Bid is somebody interested in buying. So think of it like an auction. When somebody puts up the little paddle, that's a bid. That's a bid. They're bidding on whatever's being auctioned off. When they first start the auction, whatever, that's the asking price. The asking price is always the seller. The seller is asking for a certain amount of money. The bid is what the buyer is offering. So the bid is always lower than what the seller is asking for. What the seller is asking for is always higher than the bid. When they agree on a price, the transaction happens. So if the ask is higher and the bid is lower, then that means one of them have to meet the other one where they are. So if the seller sells on the bid was lower than the ask. That's what causes the price to go down, guys. That's the mechanics of it. So if more trades happen on the bid, the price will keep getting bid lower and lower and lower and lower and lower and lower. If the price is going up, then the ask keeps getting higher. The sellers keep asking for more and more and more and more and more. If it goes down, the buyers are offering less and less and less and less. So you never have more buyers. This was buyers. You never have more buyers than you have sellers. You have both. That's what causes the trade. So you never have more buyers than sellers. Okay, wanted to give you that visual. That drives me crazy when I hear people say it, and it's such a common thing for people to say. And I seen that today when I was watching that video, and I said, perfect. I got something I can use to show people that this is something that's not even uncommon for people to do all the time. And he's showing one of the greatest investors in the world, Warren Buffett, from an autobiography that he read. I don't know if he read that from in the book as well, but I've heard so many people say it. Okay, so let's move on. We got that done. Selling pressure, average volume, what brings the stock price up and down. You got some extra game with that one because that wasn't even something I planned on sharing today. Now we're going to talk about the S&P 500 cumulative. I hope I pronounced that right. It's CUMULATIVE, weights. The S&P 500 index is used by most retail traders to gauge the overall financial health of the U.S. stock market. And I would argue that even the sophisticated ones have no idea how it actually tracks each company's performance inside that index. Okay, this is something I found out recently. Blew my mind. I'm about to show you that. So when it comes to the weights in the S&P 500 index, we are going to look at, and we don't have to come up with no sound or anything like that this time. We're going to use a website called Slick Charts. Slick Charts. Let me pull them up so you can see it. Here they are. And we don't need the SPY here. Let me take that off. And we got the education purpose. Yes. So let's put the Q&A up there. Thank you for tuning in. Hit that like button and consider subscribing to the channel. If you have any questions, please drop them in the chat. All right. So what I'm looking at here, I found out about this website that breaks down the S&P 500 weights. So if we go right here to S&P 500, we drop this down and we go to cumulative weights. We go right there. And I know it's got a lot of ads on this website. This is how they're able to offer this information for free. I just click it to get it out of there as quick as I can. All right. So they don't have a paid version. I would if they did. So I get rid of all this stuff. But here we go. So I believe, now I could be wrong, but this is what I think, that most people think the S&P 500 companies are equally divided in the index. So let me take me off the screen. So no, let me put me on the screen so I can explain it. So let's say I got an index and I got 4 companies that I want to spread my investment money in. So you got one investment, but there's one index, ETF. Let's use the ETF as an example, an exchange traded fund. And if I have 4 companies in it, I'm thinking that this is going to be 25% in one, 25%, 25%, 25%. And all of that is the whole value of that ETF. But this is not how the index works. It's not equally distributed. It's not equally weighted. Now that I explained that, we can look back at what I pulled up on the charts. So now let's look at this. This means that NVIDIA by itself, guys, represents 7.41% of the entire S&P 500 index. So that means that almost 93%, a little bit more than 93%, is the other 499 companies. All right. I hope this is clicking. So when we scroll down, by the time you get to, what company is this? It says cumulative weight. 38 point. This is higher than what I had seen the other day, because I might be looking at this a different way. Apple is 6.74%. Microsoft is 4.62%. If you took the 500 companies, which I think is 503, the way it's broken up, it would be way less than that if it was distributed equally amongst the companies. All right. So these top 8 companies represent, this is different. Was this updated? It had to be updated, guys. Let me check they might have updated this over the weekend. I know I'm not tripping. Let me open up my my workbook, because I had created a workbook looking at these weights. So let me bring this over so you can see it. Blow this up. Let me take me off the screen and I'll explain to you what we're looking at. So if we take me off the screen, right. So that's say 7.4 for that weight for NVIDIA, 7.4. All right, cumulative weight, 7.4. So what they're doing, guys, when you get down to the next one, they're adding them both together. So by the time you get NVIDIA and Apple together, they already represent 14.15% of the entire index. When you get to Microsoft, they add that one to it. So now that's almost 20% of the entire index already taken up. That's only 3 out of the 500 companies. So that means the rest of the companies are going to be divided up in that remaining percentage. So by the time you get down to this 8th company, Meta, these 8 companies represent over 30%. So looking at this number that says 34.33% of the entire index. So the rest of the 75% is going to be split through the rest of these companies. Look at this, guys. Look at this. So we're at 100. So the 100th company is ServiceNow. That company only represents 0.17% of the entire index. And by the time you get to 100, already set that. So from guys, I'm excited because this is crazy to me. This is crazy. By the time you get to the 100th company, now remember, you still got 400 other companies in the S&P 500 index. You still have over 400 companies. By the time you get down to 100, the top weighted ones, only 25% is left to divide the 400 companies into. The average person and most people do not know this. All right. So 8 of the top weighted companies account for over 30% of the entire index. I just showed you. So by the time, let's go back up. So by the time we had got to, that's too high. I'm moving too fast. 8. So by the time we got to 8, I said over 30%. So by the time you get to 7, it's over 30%. So by the time you get to Broadcom, you already at over 30% of the entire index. Wow. All right. So let's keep it moving. Weighted means that the percentage of a company and how much it impacts the entire index is based off of their market cap. It's based off the size of the company. So you're like, what do that mean? The market cap is basically the stock price times the outstanding shares. If you don't know what I just said, that's basics and you need to educate yourself. Okay. So let me see if we can find this on the charts. It's a few different things we can look at. Okay, let's use Tesla as an example. We talked about market cap. No, I want to do the visualize. We're going to talk about NVIDIA. So let's go here, NVDA. Since we're going to talk about NVIDIA, let's go ahead and put them in the captions. So we're talking about NVIDIA. We go over here, edit this, NVDA. It's a long show, NVDA. Then we go over here. Can you see the charts? Yeah, you can see the charts. We got to go to analyze. So NVIDIA Corporation, let me update this. Boop, 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 boop. Thank you so much for staying tuned in. NVDA, NVIDA, NVIDA. There it is. Got it. Here we go. Save. Got it. Bam. There we go. NVIDIA. Now, What we're looking at over here, I ain't never seen no company have all this green. They got all that green, 5-star rating, everything. All right, we're looking for outstanding shares, and then we're looking for the market cap. I'm gonna look on the website first to see if I can find it. Outstanding shares. I see revenue, float, market cap. There's the market cap. I see it. So I just wanted to see if we could see it on the Thinkorswim website. So right here, you see where it says total outstanding shares or total shares outstanding. I can't tell what number this is because you got that. Oh, there it is. That's great to know. So you mouse over it, it fills the whole thing out. So the total shares outstanding are 24 billion, 221 million. Now the market cap, you see how it's moving because they still trading it right now. So the market cap is about 5 trillion. So they telling you it's in millions. That's why the M is there. So 747 million and just changed. 14 billion, 5 trillion. That's what we're looking at. So the stock price, okay, is multiplied times the total outstanding shares, and that's what gives you the market cap. That's why the market cap is moving right now. So this is a perfect example. The market cap is not stagnant. You see how it's moving? That's because this set number of 24 billion 221 million is being multiplied times the changing stock price. And just in case, let's go a little deeper. Let's go over here to the charts. We're looking at a 1 year. We're looking at a 1 year daily chart. I got a little tied up because I'm trying to figure out where we're going to see this price action at. There it is. So we're looking at, you like, where did you go? We're looking at this is a 5-day, 1 minute intra. I'm talking so fast. Give me 1 second. This is a 5 intraday minute chart. I'm gonna show you what I mean. Right here, this 1 minute is spread it out over 5 days. So the candles are 1 minute, but it's 5 days worth of candles. This gray shaded area are the extended hours. If you don't see this on your chart and you're using the Charles Schwab platform, let me make sure I put that back up on here. Did it do it? I don't even know if it did it, guys. Not financial advice. That's that one. Here's the Charles Schwab one. Yes, got it. All right, go up here to the settings, go to equities. Right here where it says show extended hours trading session. If that's unchecked, you're not gonna see that green. You're not gonna see that gray area. So the section right here that we're seeing, this area is Friday. It stops right there. Go up to settings, go back to equities, show extended trading session hours, and this is what we're seeing now. This candle you see moving. Let me zoom in. See how it just changed? $206.97. And then you're seeing it change up here. This is because it's being traded. That number, since it keeps changing, that's why the market cap keeps changing when you go back over to analyze, and this number is changing. So the market cap is based off of what the market believes the company is worth, not what the company is actually worth, but that's what they're telling you. They're telling you the company is worth the market cap, but they're using the market value number. That number, it changes based off what people selling the shares for, trading the shares for. So if it's based off that, this can't be the actual value of the company. This is why I'm telling you the mechanics behind how this stuff works makes this make more sense, at least to me. The value of the company should be based off what's on the financials, the financial reports, not the market cap, because the market cap changes depending on what people trade it for. So you're telling me if somebody trades a NVIDIA share for $1 and you multiply that times the outstanding shares, that becomes the new market cap until the next trade happens. So you telling me the company was only worth that at the time? See what I mean? I hope you got what I just said. I hope you got that. Now, where were we? We were talking about something with the market cap. NVIDIA, okay. So their market cap is the largest out of all the companies in the S&P 500. That's why they're weighted the highest. So I want to give you a visual of that and where to find it on the Thinkorswim platform. Okay, so here's where we're going to go. We're going to go to the Market Watch tab. Then we're going to go to the Visualize tab. Now, when we go to the Visualize tab, now you can see a visual of what I'm talking about. The sizes of these boxes represent the market caps of those companies. Let me take me off the screen. Google is split into two. Okay, it's split into two. Google, GOOGL, that ticker are Class A shares. These are the ones with voting rights. Just in case you didn't know, I'm explaining that to you. This Google is Class C shares. These do not have voting rights, and that's ticker GOOG. You can also see the market cap. So this is 4.4 trillion. This one is 4.4 trillion, but NVIDIA is 4.9 trillion. So they're going to be the highest. Now over here, it's different. Remember, because we just looked at the market cap over here. So maybe this is based off the close on Friday. That's what I'm thinking. Because when we actually go back to analyze, it's saying it's over 5 trillion. But then on the heat map, it's saying that it's under 5 trillion. This is why you need to look at the charts and read and understand what this stuff is saying. So based on their market cap, that's where the weights are based off of on the slick charts that I was showing you. So they have the highest market cap. You see their market cap is even different over here. They're basing it off the market cap. Now you understand where that comes from and what we're looking at. Market cap, they're saying it's 4.97 trillion. Apple's right under that. You can see how it gets smaller and smaller. So that's how they determine the weights. Bam, you got it. Now, we was looking at NVIDIA. Let's put Q&A back up on the screen. Q&A, got it. How long we been doing this? We did about an hour. I think we're doing pretty good. Let's wrap. Let's finish what we was talking about. Let's go here. Bam. So if NVIDIA has the largest market cap in the S&P 500 index, that means they're going to have the highest weight percentage, which is what we just went over. I gave you visuals so you can put the 2 and 2 together and you can see it and all that other good stuff, right? So when it comes to those 8 companies with the largest market caps in the index, all of them, all right, here's the other thing that I found that's interesting. All of them, not some, all of them are in the information technology sector or heavily invested in the research and development of AI technology. All of them. Those companies are. Now, these companies are specific. No, these aren't. We'll break it down in a second. We'll break it down. So these companies are NVIDIA. So we looked at NVIDIA. We can actually pull the slick chart back up. And as I read this, you can actually see it as I say it. Let's do that. Let's do a split screen. Can we do the split screen earnings? Let's be fancy and take that back off. Let's go to Q&A. Nah, they won't let me do that because I don't have that. There we go. Let's split it. Let's split the screen. There we go. So with that screen split, let me adjust this. Put that there. Man, I'm loving tonight because it ain't no pressure. Like, ain't no reason to even try to rush or anything like that. Thank you for the comment. Give me 1 second. I'm about to respond to it. Pull it up on the screen for a second. Bring this over. There we go. Scroll this up. Go up to the top. It's acting like it can't move. There you go. All right. So we got that up. Let me check the chat. J Rock. Hey fam, I tune in late. Are you planning anything? Am I planning anything for the SpaceX? What's up, man? I'm glad you tuned in, man. Last time you commented, it was like right at the last of the live stream that we was doing last time. This is my man, J Rock. Am I planning anything for the SpaceX IPO? I'm so glad you tuned in to be able to ask me that question, man. You just don't understand. I'm like, man, I'm here. I want these people to ask me questions. So here's my thing with SpaceX. I do like what Elon is doing and what he's done, but the way I've seen things happen with IPOs, I'm very skeptical about it. I'm very skeptical about it. My personal opinion when it comes to IPOs, you ask yourself, why are they IPOing? Why is this company going public? The main reason companies go public is to raise money from investors. So think about how that would work. If you're investing in a company, when they first get started, the idea is you know that your money gonna have to sit there for a while. It's gonna have to sit there for a while. The idea isn't that this company is gonna be profitable as soon as they first IPO. They're trying to raise money from investors. What you raising money from investors for? If the company already profitable and you already making money, you can just use the money you making to reinvest into yourself. So they go public for a reason. They use that to take money from investors and then reinvest it into the company. So and that's what's blowing my mind about them having such a high, let me put your comment back on the screen, them having such a high valuation. Like that's what, if I'm not mistaken, that's what they've been talking about. Like these 3 companies, I don't remember the other 2, but SpaceX was one of them, that they're going to give them, they're possibly aiming for a over $1 trillion IPO. Even with the question that you asked and bringing that up, when we were talking about, or this right here, when I'm talking about the weights, that means that immediately when SpaceX IPOs, if they get over $1 trillion valuation, they will end up being on the S&P 500 immediately. They would qualify, I got somewhere up in there. It's other regulations they have to meet, but just based off the market cap, let me be clear, just based off the market cap, they would be in the S&P 500. Just based off the market cap, and they would be number 12. They would take over right above Micron if it's just over 1 trillion, but then it depends on where they are in the trillion. You see what I'm saying? And then SpaceX has a crypto coin. So my personal opinion when it comes to it, if I was to do anything, I would be patient. I would wait a couple years or a year to see how it's going to behave. Because usually, if you do your research, IPOs crash after the first 6 months or so. It's rare that they continue to go straight up. They usually crash after the first 6 months. It's rare that they just continue to go up and up and up. Let me give you an example. And then think about it. They gave the valuations, right? So let's look at this. Let's go to the charts. I'm going to give you Lyft, for example. So when Lyft first IPO'd, now this is a 10-year weekly chart. It went back to 2019. So you got, because they haven't been a publicly traded company for more than 10 years. So look what they were valued at. You can't see it. Give me a second. Let me fix the monitor. Look where they were valued at. So when they opened, when they first IPO'd, they IPO'd here at the top of that candle. The top of the body of the candle, not the wick. So it looks like they IPO'd around $87.24 based off that weekly candle. That's a weekly candle. So that probably, so that's the beginning because it's red. Yeah. So the IPO, so Lyft IPO'd around $87. And since that IPO, they came all the way down to $7.85. So if the valuation was accurate, how in the world did it come all the way down to $7.85? And even now, Lyft is just trading at $13.65. And since this 10-year low, which hasn't even been 10 years, I think the highest price has been is going to be right over here on this week at $24 and something. Let me get that price level. Yep. No, 25.54. I thought it was 24. It's 25.54. So IPOs, I'm not a fan of them. I like for a company to be out for a while before I ever consider investing or trading them. In my opinion, IPOs are risky. I don't care what the company is, just IPOs in general. Like if you go on AI and look that up as far as like the risk, most IPOs crash after the first 6 months. Some don't last that long, like this example that I'm giving you right here. They usually dip. They usually dip. I was looking to, okay, let me see what you got here. I was looking to run up RDW before the IPO. RDW, is that another ticker? I'm kind of lost. That is a different, I don't know what RDW mean before the IPO. Oh, this is a different company. Got it. It's a different company. Got it. Is it? Am I missing something? Because you said before the IPO, I was looking to run up RDW before the IPO. Explain that to me. I'm a little lost. Forgive me. And appreciate the comments, man. I'm telling you, where was I at before you even start asking these questions? I was naming the companies. So let me finish naming the companies while I wait on you to clarify what you were saying with that. We were talking about the companies. So pull them back up. We were looking at slick charts. So name these companies. So the companies, pick back up where we were, guys. I was talking about when it comes to those 8 companies with the largest market caps in the index, all of them are in the information technology sector or heavily invested in the research and development of AI technology. I got your comment. I'm gonna get to it in 1 second. So those companies are NVIDIA, Apple, Microsoft, Amazon, Google, Broadcom, and Meta. If you were counting, then you know that's only 7. But if you really knew and understood the index and how it worked, then you know that Google is counted twice, because we talked about the Class A shares and we talked about the Class C shares. Looking at related stocks. Got it. Looking at related stocks. So is RDW a related stock of the SpaceX IPO? I think I'm following you now. So I was looking to run up RDW before the IPO. So this company that you was talking about, RDW, I'm guessing is supposed to be related to the SpaceX IPO. And what I have pulled up on the chart is the 10-year weekly. And it looks like it tried to test this. So you had a double top on those 2 weeks. So this is a 10-year weekly we looking at. So this hasn't been out for 10 years, or at least, am I zoomed in too far? So this is 10-year weekly. So we got half of the year so far. This is 2026. So 1, 2, 3, 4, 5. So it's 5. So did they IPO around $10, this company itself? Then you got an earnings here. Why is it price action that goes back so far, but it's not an earnings until here? That's weird. $1.67 low. So it's like a five-year chart. Let's go over here. Analyze. They're rated F. Redwire Corporation. Read what they're about. Redwire Corporation provides critical space solutions and space infrastructure for government and commercial customers in the United States, Europe, and internationally. Now, here's my thing with stories. I don't like stories. I hate stories. If the company is a great company, it's a great company. You don't need a story. I hate stories. Stories is like hype to me. And then it depends on the strategy or the technique that the actual person is doing. Are they day trading? Are they swing trading? Are they investing? Are they shorting? Are they going long? Are they trading options? Are they trading stocks? Like, all of those things matter. How much time do they plan on being in the trade? What price levels are they looking at? Why are they looking at those price levels? So with this company hitting historical highs based off what I'm seeing, so if we extend that over, and you've been watching the live stream, so you already know how we do this. We extend that over. We already put the rectangle tool there. And that's just to show like a price level, because we talked about that before. Edit properties, move this over to December 1st, just to get a zone. December 1st, okay. But that was only out to 2025. We need to go that all the way out to 2026, December 1st. Bam. So right there, we can see that this week right here perfectly tested that previous 52-week high. Now, if we zoom in, not 52-week high, 10-year high. The high was $26.64. So it was 2 cents short of that 10-year high. And since then, it's a major sell-off because this next candle didn't open. Well, it could have been a gap fill too. So now if you come over here, you look at that, these 2 weeks had a gap. So this would have been yellow. Then we extend that over to the right, but we can see just by looking at that, that gap was filled. So then we remove that. Corresponding price levels, look back. Look at the EPS. EPS is terrible. So that's what I'm saying. Like it's so many different variables to consider. It's so many different things. Looking at the EPS, look at the bottom of the screen. It's never been profitable. And these are adjusted. So just adjusted means that the actual GAAP, the generally accepted accounting principles were even worse. They were even worse than this because Thinkorswim usually uses the adjusted EPS. So that's what I'm seeing on the charts. That's what I'm seeing when I look. But I don't like stories. If a company is a good company, you're going to see it. You're going to see it in the financials. You're going to see it. They don't need a story. That's the first thing that makes me weary about any type of investment. What type of stories they talking about? Stories. Always a narrative. Like, well, why are we talking about all these narratives? Show me the financials. Let me look at the chart. Right at the bottom. I don't see, so it's nothing positive. You see that? Let me take me off the screen. And it's just the EPS at the bottom. Negative. Now, when we look at Lyft, look at the bottom. Negative. Remember the IPO thing? Negative. It didn't get positive to over here, and it was only by 1 cent. Positive. See how it took years? I hope you're learning. And this is Lyft, not NVDA. So let me take that off the screen. I'll leave that one. It took 10 years, not a whole 10 years. We'll count it in a second. Let me update the Lyft thing. Man, thank you so much for asking that question, though, because this helps me figure out if I'm tripping or if I need to do some more research and educate myself. And what am I seeing? Like, I need to look. So let's go over here and analyze, get this. So is Lyft Incorporated. Go back over here, Lyft, LYFT, Incorporated. All right. And we're just using these as an examples, guys. It's just examples. But I just want you to see what I'm looking at and like what's going on. So Lyft IPOs, so how you value the company at $88 per share. And then after they IPO, the first earnings they had was -$9. Oh, you can't see it. Let me take me off the screen. The first earnings report, -$9 per share. Negative, 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 negative. So there's 1 year, 2 year, 3 year, 4, 5, 6, 6 years to be profitable 1 cent per share. And this is adjusted. So the GAAP could have still been negative. To find that, you have to look at the SEC filings. So me doing these live streams, guys, I'm still learning. I'm still learning. I'm still learning. And I'm loving doing these live streams because when you guys ask these questions, let me find this question. Hey, cuz, I thought that was somebody else. Hey, if SpaceX, hey, cuz, thank you for tuning in. I'm just talking away. I thought you was the other person. Hold on. If SpaceX IPO tomorrow, what would be your strongest argument against buying it? Or said differently, what is the biggest risk most retail traders aren't talking about? So I don't know when you tune in, cuz, but it's exactly what I was saying. Companies IPO under the pretense that they're raising money. Their first goal is to raise money. Their first goal is not to return money to investors. Their first goal is to raise money. That's why they IPO it. Initial public offering. We want to raise money by selling our shares to the public. So Sam Bankman-Fried, and thank you so much for the question. Sam Bankman-Fried, even though it was in crypto, the idea is this. He started his own crypto coin. He made up his own doggone crypto coin, Sam Bankman-Fried. So when he started his own crypto coin, he gave himself a crazy amount of coins, and all he needed to do was sell one coin for $1. So if he sells this one coin, just one, for $1, that means the valuation for all the other coins he made up is worth $1 each. So now it looks like a tangible asset and they don't mean anything. But because it's sold at that price, the assumption is that everything like it would be the exact same price. Look at real estate. They make comps. They compare similar properties. You don't compare a house that's 3 bedrooms in Michigan to a 1 bedroom in Mississippi. It has to be very similar. They usually try to do the same neighborhoods, the same cities, same amount of bathrooms, same amount of, because they're trying to find something that actually sold that's as similar as possible. So this is the same thing they're doing with the stocks or financial instruments. But the cool thing with financial instruments is that it's exact. One SpaceX share is a SpaceX share. It's exact. But if they're hypothetically valuing this company, because it ain't traded yet, at over $1 trillion, and their goal is to raise capital, from what I've seen when I've looked at these charts, like as soon as I used Lyft as an example, which you've heard me talk about Lyft multiple times, it tanked after it IPO'd. And most companies that I've seen, what's another one? Not Uber Eats. What's the other one? Dash, right? DoorDash. Is it DASH? Let's look at Dash. Dash. Is this DoorDash? See what I mean? So it IPO'd. Let me take me off the screen. So DoorDash IPO'd somewhere around, so the open is here. So they IPO'd, and I could be wrong, but I'm seeing 182. So they IPO'd at 182, and then that was 2020. By 2022, it was trading for $41.37. And we're looking at a 10-year weekly chart. So from the IPO, from that open to that 10-year low, they lost 77.27%. Ain't that crazy? Now they did have some highs. They spiked up, but it didn't last. They spiked up here. They spiked up here to retest it. But then after those 2 times, so that was about a year that it held up at those levels. Bam, $41.37. Now, recovery time, 3 years. 1, 2, 3. 285.50. Broke those levels right here. You see how I was respecting it as resistance for a while? And then we can do this as a zone. So let me show you what I mean by the zone. If we use this, and we extend that over, so we're going to use the rectangle tool, use the higher the green candle and the higher the red candle right there on the week. Edit properties. Bring this all the way over. 2026, December 1st. Bam. So now that we had that zone there, take all these drawings off here so we can see that it was held as resistance a few of those weeks before it got above it, and then it spiked and fell right below it again as support, as resistance. It fell below it, then it came back above it. But when it got back below it, boy, did it sell off. Did a pullback, wasn't able to come back and test that zone, and then it sold back down. So now when it got back to 182, you telling me 1, 2, 3, 4, 5, 6 years later, it's trading at the same price that IPO for. It's like it didn't even go nowhere. Ain't that crazy? Like when you think about it that way, that's crazy. It's trading exactly what it was trading for when it first IPO. If it come back to 182, but my point is the patience. My point is the patience. The story. SpaceX is a story. I hate stories. It's hype. That's what crypto is. It's a story. It's Elon Musk's company story. They're gonna be the valuation is at over $1 trillion. They get that wrong all the time. I've seen it on charts often. They get the initial public offering value wrong all the time because I can't understand how the heck you went from 182 and 2 years later you $41.37. Now, after the wait, now check this out. After the waiting period, from that low to that high is a 590% gain. That's from waiting. But then buying at the IPO, that was a 77.27% loss. That's a huge difference. Now, waiting, let's do it another way. Let's use that same tool. So it opened at that 182 and then go to that high. Now, that's only a 56.87% gain from the IPO to when it went up all the way up here. Look at the time it took. 1, 2, 3, 4, 5. So about 5 years. And then you could have took the days and divided it and did math and all of that, because that's what I'm seeing. So it's not just the fact that it's SpaceX. All I'm hearing is IPO, initial public offering. So companies, I don't care who it is, they have to prove themselves to see what the market believes that value is worth. That's just how I see it from my always tell the road. Yes, cuz they would the charts tell you more about how people feel about it. The financials tell you about how it's a different type of people, like how the customer feels about it. That's a good way to put it. How the customer feels about it and how the directors are running it. Because a company can have a great product and horrible management. The financials will let you know that. Sales are crazy, but the way the management, but the way the money is being managed after it's being made is terrible. That's a management issue. So the financials tell a different story than the charts do. So what was blowing my mind when I first started trading and investing was that it was people that was talking about one or the other, because they was either talking about technical analysis, which is just the charts, or they were talking about fundamental analysis that was just the financials. And then what I learned over time was that they go together. You need both. You need to learn how to use both. One without the other, you have a very narrow perspective. The value and the profitability is going to show up in the financials, kind of like what I was showing the other guy at the bottom of the screen. Like when we could just glance at the charts and look and see the negative EPSs down here on the charts, this is telling me that they're not profitable. And then recently I have found out the difference between the GAAP EPS and then the adjusted EPS. So the adjusted EPS is a way for them to lie legally. so they take out some of their costs and make the earnings per share look better than it actually is. But by law, SEC regulations, they have to actually disclose the GAAP EPS in the filing on the 10Q and the 8K, if I'm not mistaken. Yes. So when and I'm saying 8K like I'm mistaken because it's either called an 8. I get 8Q and let's pull it up. I get those confused sometimes. So SEC website. So if we go to the SEC website, who just had earnings? Who just had earnings? HPE, Hewlett Packard. So let's do that one. So I'll show you what I'm talking about. So we go to Hewlett Packard, we go to search filings, we go to the SEC website, full text search, go here to more options. We put in HPE. Now when we pull up Hewlett Packard, we need to switch this to the time frame. So we go last 30 days. Now when we pull up the last 30 days, they're going to pull up those forms. It's an 8K. It's not an 8Q. So let me pull me off the screen so I can show you what I'm saying. Right here, the 8K. So here's when they reported their earnings. Here are the two public reports that they put out. So we click on this 10Q quarterly report and we open this up. And this is public information, but the average trader, retail traders don't go look at this stuff. Now I'm about to show you what I mean about as far as the EPS. Now when we go on this form right here where it says diluted net earnings per share. So sometimes they say EPS and sometimes they say net earnings per share. So this is EPS. That's it. So diluted right here. Basic. This is the GAAP one. It's 44 cents. That's the generally accepted accounting practices EPS for Hewlett Packard. Now watch this. When we go over to the charts though, put me back on the screen, and we go to HPE and we go over to the 1 year daily. Now look at what it's saying. It's saying the EPS was 79 cents. But that's because this is the adjusted EPS. They took out some of their costs so it make it look like the EPS is doing better than it actually is. But the SEC regulations make them have to use the GAAP. So even though it's positive here, the GAAP could have been negative. We got to do our homework, guys. We got to do our homework. Oh, man. So, yeah, thank you guys so much for the questions. I didn't even finish what we was talking about. We was talking about Google. So we were talking about the weights. Let's go back to the weights. Going to the weights. Go to the weights. Here is, and then we'll put this on the earnings format, how we do that, so we can see the weights. And let's go back as a reminder. We're going to back up a little bit because the questions came in tonight. I really appreciate you guys for asking these questions, and I hope I'm answering them too, to where you're getting something out of it. So let me put the Q&A back up on here. Q&A. Just got a comment. I'm waiting on it to come through. Question: if the technical analysis and fundamental analysis point in opposite directions, which one do you trust more and why? That's a great question. Okay, how it points in different directions. I would say the divergence is going to be more on the technical side than it would be on the fundamentals, because the fundamentals are the fundamentals. The technicals are based off of what the market sees. So the market could be unaware of the fundamentals. It could be a panic sale. So like if the company fundamentals hasn't actually changed, I'm looking for the button to put this back up on the screen. If the fundamentals in the company has not changed, which is released every 3 months, but the charts are telling me something different, the price on the chart is controlled by the traders. That's not controlled by the actual value of the company. The market is saying that the value of that company is that. And I don't know if you caught that earlier in the show, but that was what I was showing about the market cap. The market cap of the company is based off the trading price of the shares. And then the trading of the shares is based off the mechanics of what caused the stock price to go up and down. So the up and down is based off of if the traders or investors are trading more on the bid or on the ask. If they trade more on the bid, the stock price gonna come down. Now, as the stock price come down, that's gonna be multiplied times the outstanding shares. So let me show you that. We go over to the Analyze tab, bring this down. We're going to change this. Let's go to NVIDIA because I think they're still trading that right now. So you'll be able to see it if you have missed that earlier. But right here, see where it says total shares outstanding? That's how many slices that the market cap has been divided up to. You see how that number is moving? Now, where does the market cap value come from? How do they know the value of the company? That's based off what it's trading for. So now if we go over to the charts, we can see what NVIDIA is trading for after hours right here. So it's trading at $207.90. You see how it's still moving? Now you take that number and you multiply that times the outstanding shares, and then that gives you the market value of the company. So if that's giving you the market value of the company based off what people trading it for, that's not telling you what the actual company's worth. The financials tell you more about what the company's worth than the actual technicals. So that would be called a divergence. So I would trust the financials more than I would trust the value of the company or the technicals. And that's what causes the companies to be overvalued or undervalued, because if some people believe the company is worth more than what it actually is, they can keep driving the price up. So now it's just overvalued because people keep buying a premium, buying on the ask and just driving the price up. Now, if people don't believe in the company, they're going to be selling on the bid, and then it drives the price down. But the actual value of the company hasn't changed yet, not to the public, because the financial reports are released every quarter. So that's why. Excellent question, too, because most people don't even ask that. That's an excellent question. And I hope I answered it to the best of my ability. Now, where was I at with the slick charts thing again? The slick charts thing. We're talking about the weights, earnings. Excellent questions tonight. Excellent. Go back to live chapters, captions. Question A. Here we go. So all of them are in the information and technology sector. Let's back up again because I think I got lost again. Yes. When it comes to those 8 companies with the largest market caps in the S&P 500 index, all of them are in the information technology sector or heavily invested in the research and development of AI technology. Those companies are NVIDIA, Apple, Microsoft, Amazon, Google, Broadcom, and Meta. If you were counting, then you know that that's only 7. But if you really knew and understand the index and how it worked, then you know that Google is counted twice. Once as GOOGL, ticker GOOGL Class A shares, and again as GOOG Class C shares. So even though Amazon is in the consumer discretionary sector, for example, their most profitable subsidiary is AWS, Amazon Web Services. Most people don't know that. They think Amazon make most of their money from the online retail website. No, it's Amazon Web Services. Meta and Google are both in the communication services sector, but both companies are heavily invested in AI technology, which makes the performance of the S&P 500 index and ETFs like the SPY extremely sensitive to what happens to these companies that are invested or involved in AI technology. So this leads me to believe that because of the mechanics, that retail traders can get spooked into thinking that the entire market is doing bad because of what's happening with information technology and how people feeling about it. Or, hold up, let's back it up because I got thirsty and got thrown off. So this leads me to believe that because of the mechanics, that retail traders can get spooked thinking that the entire market is doing bad when it could simply be a market correction in the information and technology sector or companies that are heavily invested in the AI technology. So you have the none of those was in energy. I hope you caught that. None of those was in energy. We had information technology, communication services, and consumer discretionary, and that was only because Amazon has such a large market cap. But their most profitable business is AWS, Amazon Web Services, which is also information technology. If they didn't have the online website that put them in the consumer discretionary sector. All right. So now let's talk about the standouts of the week. Let's talk about those. We did a long show tonight too. Hewlett Packard Enterprise, company ticker HPE, which we have pulled up on the chart real quick. So they were Monday's earnings. We had talked about Hewlett Packard earnings on Monday, and Tuesday they were the biggest gainer. So let's put them in real quick and talk about, whoo, this is crazy. Let me pull this over so you can see what I'm talking about. This is because we're looking at a minute chart. All right. So this is what was blowing my mind about looking at HPE on the charts. Okay. Let me show you what I mean. So this, and do I have that? Oh, let me update this real quick, guys. HPE, HPE, Hewlett. There it is. Bam, bam, bam. Hewlett Packard. Got it. So what blew my mind about Hewlett Packard, this is weekly candles, right? No, these are daily candles, right? So they had earnings on Monday, but the earnings that they released on Monday was after hours, okay? So since they were after hours, this was Monday's candle. Here's the earnings information here. So the very next day they responded to it, but they actually gapped up after hours. Like what I was showing you when we were looking at the minute chart. They gapped up after hours, crazy levels, right? So the market opened the next day at the top of this red candle. This is where they opened at the following day when they were responding to those earnings. So that's where this big yellow gap comes from. And we'll talk about that in a second. So they gapped up, open here, hit a 52-week high of $64.25, and they end up selling all the way off down here during the trading session, but closed here. Then the next day, so this is Wednesday, they started to try to fill that gap up. Then Thursday, they tried to fill it up just a little bit more. Then on Friday, they came almost all the way down and filled that gap up. So now what we're going to do, we're going to adjust this gap now that we're on this live stream. Let's just go ahead and adjust this now. So what we need to know, what's the low of this candle? So the low of that candle is $48.54. $48.54. $48.54. $48.54. Bam. So now that's how much of that gap has been filled with a regular daily trading session. So it still hasn't been filled entirely, but that's a lot to take back. So they lost 23.4% from that 52-week high, which is also a historical high for this company if we go to the weekly chart. So in 10 years, that's the highest it's ever been, $64.25. So what I'm interested in, why I'm like the standouts, is that Hewlett Packard actually had good earnings. They knocked it out of the park. They had great earnings. And even with great earnings, what you really got out of it was the gap up. Now, this is what I'm really like looking at. Like what I'm curious about, is it going to fill this gap and find support? Or is it going to find support on the 9-day simple moving average? Or is it going to come all the way back down here and fill this other gap? That's what I'm curious about. I want to see how far this pullback is going to be, or is it actually the top and it's going to reverse because of what's going on with information technology right now? Is it going to continue to just keep running, or is this also going to fall victim to this change in optimism? And it could be brief, but that's what I'm keeping an eye on. That's what I'm seeing with that. That's why they stood out to me this week. Now let's talk about the next company. So I got some notes. Let me read this. They hit a 52-week high of $64.25 on Tuesday, June 2nd, on gapping up on high and gapping up on high volume. So it wasn't just that they gapped up, it was crazy volume. So that volume was 153 million shares traded following that earnings that was aftermarket on Monday. So on Tuesday, that's the type of volume they came kicking the door in with. Following an aftermarket earnings announcement the day before. Since then, they've lost 23.4% with their closing on Friday, June 5th at $42.20. Here's what I've learned. When someone doesn't understand the mechanics behind price direction, they look for a story. So we've been talking about that earlier in the live stream tonight. I hate stories. I hate narratives. This story comes in the form of news and the idea that if the news is good, then the stock price goes up. And if the news is bad, then the stock price goes down. It's only when the price does the opposite of what the story suggests that people start to ask questions like, why is this? As long as it's in alignment, it makes sense to them. Soon as it's a divergence, it's confusing. So earnings announcements expose this flawed idea more often than anything else I've seen. The reason for this is that selling pressure can increase even if the earnings news is good or positive, because some institutions plan on selling to exit regardless. They plan on making their position smaller anyway. So they really didn't care whether the news was going to be positive or negative. They plan on taking advantage of that volume anyway. So institutions need volume to enter or exit positions, and big stories and earnings attract increased trading activity, hence more volume. Okay. So that's with that. Now, I want to talk about the other company that stood out to me, which was the Trade Desk, ticker TTD. So let's go back to the charts and let's talk about that briefly. So the Trade Desk, let me update this. TTD. That's not it. TTD, then go here, the Trade Desk. Give me a second, guys. I just want to make sure that we got this right. Here we go. Save, update it, bada boom, bada bing. Yep. Now we go over here, TTD. Now I'm gonna read my script to make sure that I don't leave any of this out. And we almost about to wrap this up. We almost at the end. Thank you guys so much for tuning in and liking and subscribing. I really appreciate it. So here we go. The Trade Desk ticker TTD hit a new 52-week low. They hit a new 52-week low on Monday, March 9th at $19.74. Yep, you can see that on the chart. So the two times it was tested nearest to that price was on May 13th at 1983. So let me cut the floating data box on and walk you through this. So we said May 13th, right there. So that's when it says, so the two times that it was tested nearest to that price was Wednesday, May 13th at $19.83 and Friday, June 5th. So this right here, June 5th at 1984. Yep, at 1984. The highest it's been since that 52-week low. So from here, the highest it's been is this candle right here. So the highest it's been since that 52-week low was $24.87 on Friday, May 1st. That was almost a 26% gain in about 3 weeks. All right. Got a new chat. Give me 1 second. Pull you up. Let me wrap this up and I'll pull your chat up in 1 second. What I'm seeing on the technicals is a strong push to create a new 52-week low. And even with all the negative market news that we had on Friday and the dip in the leading sectors and the SPY, it wasn't able to do it. It wasn't able to create that new 52-week low. So that caught my attention. Let me see what we got for comments. J Rock, I was in this earlier in the year and had a nice run. Man, hey, I'm so glad to hear it. Tell me you made some money. Don't threaten me with a good time. He said, man, I was looking at that one. And somebody had mentioned something about Now as well. And both of these are in the sector, communication services sector. So I'm glad to hear you had a nice run on this, J Rock. That's what's up. Don't threaten me with a good time. All right, now let's see what we got here. So Tuesday's lose. So yeah, Trade Desk was Tuesday's loser. So let me see where I'm at now. Put the question thing back up here. Here we go. All right. So where we at? So these are the things to watch. These are the things I'm keeping my eyes on from what happened this week. So companies in the sectors outside the information technology sector becoming the biggest gainers. That's what I'm keeping my eye on. This upcoming week, are we going to see some gainers pop up in the SPY or in the S&P 500 index that are not in the information technology sectors? And companies in the information technology sector or heavily invested in AI technology becoming biggest losers. I'm interested to see if that's going to happen this week. And this could mean that this is more than just a pullback. This is what this could mean. This is money moving over into other sectors in the market. That's why I'm keeping an eye on that. That's what I'm looking for. So guys, this was I really enjoyed myself. Boy, I'm so glad I did this live stream. I didn't expect it to be this long, but I really enjoyed myself. So let's go ahead and close this up. Thank you guys so much for the comments. And man, I really appreciate you. So here we go. You already know. I hope that you learned something and I hope that you earned something. Thank you guys for joining me tonight. This Sunday, June 14th at 9 p.m. Eastern time, I'm reviewing comments and responding to chats, as well as performing a live Q&A again, like we did tonight, so we can focus on building our community as well as answering you guys' questions. And make sure you keep tuning in weekdays following a market trading session at 11 p.m. Eastern time. Take care and God bless.